Yes, ladies and gentlemen, today I have a special guest here, Robert Childs, who is a credit specialist. You've been in the credit business for quite some time now, among other things prior to credit, but we met through your credit expertise. I've learned some things from you that are, unique in its own way. So I know that you're an expert at what you do. Could you introduce yourself to the people?
Most definitely. Thank you. My name is Robert Childs. I've been in the credit restoration business since 1990, going on 34 years. Long time. Fell into it completely by accident when I used to work in commercial banking in Silicon Valley. And I was actually repairing my corporate clients' credit for free. And after getting laid off, I ventured into it completely by accident and turned it into a company. So it's been a long time. We help people all over America, who have bad credit. We focus mostly on the mortgage industry, people who know that they have bad credit and the mortgage lender cannot get them approved for it. Refer them to us for a fixing up, if you would. And the process doesn't happen quickly overnight, but takes some time. We talk about that in a little bit. But certainly, most credit reports are fixable, not all of them. And just takes time. And once we get the person back to a 700 plus, hopefully they can enjoy a much lower rate and a lower payment on their next mortgage payment.
Nice. Now, one of the main questions I want you to explain to the people before we take a deep dive into it, how important is credit in the American economic system?
Well, let's put it this way. According to myfico.com, this country, United States, has 8 times more credit cards in our wallets than the whole world combined. We're such an indebted society. According to the U.S. debt report, or usdebtclock.org, we just passed a 17 trillion with a T, trillion dollar mark in credit card debt.
Wow.
And that's not even talk about past due or collections. This is just talk about on-time debts. And of course, student loans is another factor. So it's important, especially if you work in law enforcement. They're going to check your credit to get promoted. I don't care if you're working at McDonald's, they're going to check your credit, especially if you work as a cashier working with the cash in itself. So just about every walks of life, school teacher, working for the government, you work for a federal government agency, or even as a contractor, they're going to do a deep credit check and background check. But just in general, these days, if you're getting out of school and you become an engineer or an architect, they're going to check your credit. Especially work in banking, they're going to check your credit before having employment there.
So it's pretty much safe to say that credit is one of the top priority.
Yes, it
Okay.
is. Very much so. We're a credit-driven society. I mean, outside of people, borrowing money, using crypto to pay for things, but more or less just credit. I mean, anywhere you turn, credit cards are needed, even for reserving a hotel room, renting a car, where they don't take a debit card. It's important to have good credit, even to have a pretty decent credit limit.
Okay. Now, and I got to agree with that, ladies and gentlemen. Credit is important. Now, for people who feel like, who've made a few mistakes in their lives, they may have had a repo, they may have had a bankruptcy or a foreclosure or something, and they've lost, hope. Like, I can't do it. My credit's shot. It's over for me. What do you usually advise those types of people?
Well, the negative credit items can only stay on your report for a total of 7 years, exception for bankruptcy or other type of judgments. They can stay on for up to 10 plus years. But I'd say there is light at the end of the tunnel. I mean, I've seen people who had bad credit 3 or 4 times in their lifetime, and they can recover from it. We'll talk about the actual cleanup process and how that works in itself. But people will say, well, the most important thing is to reestablish yourself. If you're fresh out of bankruptcy, all your credit cards are wiped out. The most important thing is, Tony, taking a look at what people know that's on their credit reports when it comes down to reestablishing your own credit. And reestablishing means by getting some more credit cards. I don't mean go out there and get 16, 20, 25,000 dollar credit limits. Even $400,000 or $500,000 credit limits is important to reestablish your credit, because according to myfico.com, credit cards in itself are 30% of your credit score, or about 250 of your 700 points. So it's imperative for someone to have, especially after BK, for example, or someone who just moved to this country and paying cash all their lives, or they never had any credit card. It's important to have at least 2 or 3 open good credit limits, doesn't matter how big or small, on your credit report and active and hopefully paid off on a monthly basis to establish a higher credit score. Because if someone doesn't have any credit cards, you might be missing out on about, like I said, between 200 to 250 points.
Now, let's dive a little deeper. When you, in the beginning of, let's say, your credit career journey, how did you stumble across knowing that, hey, this is for me? Like, I'm great at this credit thing, or what was your first hands-on like for you in credit and knowing this is what I'm going to do for a while?
In 1990, when I got started, started out with one employee, and I'll tell you about my company in a little bit. There was no internet. There was no Google. There was only going to the library and a few books that you buy at Barnes & Noble to learn about credit repair. It was in its infancy. There was a few companies like Lexington Law Firm. They've been around a long, long time, since the 70s. And just by reading publications and newspapers, magazines about that, and live and learn about the FCRA laws, the Fair Credit Reporting Act laws. They say three things: anything that's inaccurate, erroneous, or can't be verified must be removed from the person's report. So back then it was all physical reading manuals and encyclopedias, books, and that's how I got to learn the process. And of course those laws have changed over the years. There's thousands of FCRA laws in itself that are written by Congress since 1971. But it came down to understanding, even if someone has a couple of charge-off accounts or collection accounts on the reports, and even though it's their fault and their mistake, be it if it's COVID error or they got lazy and didn't pay the bill, there are protection laws against aggressive collection agencies, debt buyers, or just in general the creditor themselves calling that person, and with the do's and don'ts of the law. That's called an FDCPA, a Fair Debt Collection Practices Act violation. But more importantly, the consumers do have protection laws, even the debt is theirs. And if the credit bureau or the creditor or the debt buyer that bought that debt from the creditor violates those laws, then they could be sued for a financial settlement, and or the account can be removed from their bureau report permanently.
So a lot of consumers, I don't think they're aware that they actually have these rights, is what you're saying, right?
Correct.
Fair Debt Consumer Practice.
Yeah, FDCPA.
Yeah.
FCRA, excuse me, FCRA.
And you know, because I'm in the collections industry, I totally understand that consumers, they have these rights, they have protection. So, someone like you who's an expert at knowing these laws and knowing how to protect them, I'm assuming that this is something that's taken you years to get to this point.
Correct. Yeah. Yeah, there's loopholes also in the law. The FCRA laws that pertain to accurate information on your credit report. See, the credit bureaus, if we see an FCRA violation, what is an FCRA violation? Let's say someone files for bankruptcy, and what does BK do? Wipes out all debts to zero that are approved by the court. And if you see an account that says, like Bank America, Wells Fargo, not to use any names, it says included in bankruptcy on the comment on the trade line on the report, but it has a balance. That's a huge Fair Credit Reporting Act violation, because BK is included in bankruptcy, or let's say a Bank of America sold it to a debt buyer, like Portfolio Recovery, for example, which is the largest in the country, and B of A says sold to another lender or transferred to another lender, and they took it over, put themselves on the person's credit report, the bank should put a zero balance, and sometimes they don't. So if you owe $5,000 here, $5,000 there, the credit bureaus think that you're $10,000 in a hole on that collection debt. So both, there's a chance that the debt buyer and the creditor can also be sued for a violation of FCRA, let alone FDCPA, depending on what the collection agency does when they come after you. So that's pretty common. And I would say 20-25% of the time, I see included in bankruptcy and there's still a balance. If there's a $1 or higher balance on that credit report, that's a violation of FCRA. And we have to give the credit bureaus at least one chance to make that correction. They have up to 30 days to make that correction. If they don't, then they could be sued for a violation of FCRA. See, the credit bureaus are like children. The creditors are like parents. The parent tells the child, hey, report this information. And the child is innocent until proven guilty. So once we prove to the credit bureaus, here's a violation here, here, and here on these accounts, Mr. Credit Bureaus. And if they don't remove it, then they could be sued for violation under FCRA. And they'll pay out a nice 4-digit settlement to that consumer. So it really is that tell people, hire a good monitoring service. Credit Karma, your credit card company like Capital One offers a really good monitoring service for free. Join some kind of company, monitoring service, the ones that you pay for monthly, like 8, 10, 15 bucks a month, is even more accurate. And my best monitoring service company that I like, and also gives you a fresh credit report weekly, is IdentityIQ.com. Identity, the letter I and Q.com is phenomenal because they get the information directly from the bureaus itself, not from a third-party company. So monitor your credit, make sure things are accurate. You might have remembered 6 years ago this month, Equifax got hacked.
I remember that.
It was a mess.
I remember that.
Yours truly got affected by that. And a year after that, in 2018, I get a call from a young lady saying my 5-year-old daughter's social security number was compromised. And there was negative stuff on her daughter's credit report at the time, 5 years old.
Wow.
Crazy. Of course, it was cleared up. But monitor it. Monitor stuff. I mean, the casinos in Vegas just got hacked, and it compromised people's personal information. So, please check your credit as often as you can. Very, very important, because you think you have a 750 FICO score, pay off all your monthly debts on time, your credit cards, and you haven't seen your credit report in a couple of years because you think you pay everything on time and off every month. Lender runs your credit report. No, George, you got 625. Well, what happened? Oh, there's a collection counts on here. Those are not mine. Identity theft could happen. So, and I also may recommend putting a freeze on someone's credit reports as well. That's a story for a subject for another time, but very, very important to protect yourself, especially if you were a victim of a hacking of Equifax or MGM Grand Casinos. They got hacked and lost $100 million. The people's socials got hacked, and the employees got also personal information got compromised. So it's important to please check your credit as often as you can, monthly, bi-weekly, like I do. Make sure it stays clean.
Nice. Now, for those people that I've never had that situation with my information, identity theft. Mm-hmm. But for those who have had that happen to them, because it is a reality, is there any hope at the end of the tunnel for because I know some people are like, man, and my credit's tore up from some other guy. Is there still a technique to, for someone like you that comes along and say, hey, we can fix that as well?
If someone's a victim of identity theft, usually 9 times out of 10, 90% of the time, the victim is not known by the predator in this case. So the best thing I can suggest would be immediately file a police report. Don't waste your time with city police unless you're like in LA, that's big city, or San Francisco or New York, but do it with the county sheriff's officers. And they don't arrest people unless they can prove that fraud is taking place big time and they know who the perpetrator is. And you say, oh, it's my cousin Billy over there. He might be arrested if that person presses charges. But the police don't take any action. But a police report on the sheriff's letterhead that says these accounts are identity theft, you send it into the credit card companies. Immediately they'll close down the account. They do the investigation. And the one most important thing, guys, make sure that they verify your signature. If your signature, for example, goes from right to left, but it goes from left to right on the receipts at what the credit card company has, they have to remove it quickly, usually within 2 to 4 weeks. So, but it comes down to, like I said a moment ago, monitor your credit. But if you see, a number of accounts that are in collections, God forbid a mortgage, I don't know how that can happen, but if there's stuff in there that are identity theft and they're not yours, file a police report with the local sheriff's department ASAP.
Nice. Now, over the years doing credit, what has been like the worst thing that you've seen? Without, of course, any personal exposing, but what's been something that you've seen where it's like, wow, or the amount of debt, where because what I want to put into perspective is that, all of this is possible if you do the right thing and you listen to someone like your advice.
The largest collection debt I saw, besides foreclosures back in 2008, that's the exception of the rule, was a gentleman, and I had to do a double take on his report. And the word foreclosure, it means for homes, and the word repossession means for cars. And I looked down and it was a $4,500 monthly payment. And I thought it was a mortgage. This was about maybe 8 years ago. And I did a double take, it said repossession. I looked at it and he had a Lamborghini that was repossessed.
Wow.
And the ironic thing is, it was an oil tycoon from Texas. He had a net worth of $4.6 billion, and I don't know why he had a 530 FICO score and his car got repossessed. I don't know why, but the logic behind that, I have no idea. But he hired us to fix his credit. But that was the largest one single debt that I've seen. But the biggest ones I've seen are usually credit cards, medical bills I'll talk about in a minute, but credit cards are usually the norm. I see an average of between $8,000 to $15,000 in charge-off debt on credit cards, especially in California. Yeah, California and New York are two biggest states I see people have the largest charge-off credit card debts.
With credit issues.
Yes, big time. Yeah. So now when it came down to, Tony, when we talked about collection agencies, guys, one thing I want to give you a warning on: if you get a collection letter in the mail, or you get a collection phone call from a debt buyer or the creditor themselves, remember, you're being recorded for quality assurance. Never admit that it's your debt. Refer to yourself in a third party. Don't say, how much did I charge? How much do I owe? What is my balance? Refer to yourself in a third party, because again, if you're being recorded for quality assurance, they can use that against you in a court of law at a later date, decide to sue you. And for larger debt, they probably will. Most important thing is refer to yourself in a third party. How much is owed on this debt? What is the balance on this debt? What did you say the balance is owed? Things like that. And most importantly, never pay a collection debt until someone like myself says so. Now, if you're trying to get a mortgage and the underwriter at the bank says, George, based on the debt to income ratio, we have to have that $8,000 charge-off collection credit card balance to zero before we can approve your loan. But if the debt is, let's say, more than 4 years old, 5, 6 years old, remember, it only says on report for 7 years. Okay. So let's say it's 5 years old. If you call them up and make a settlement offer, that account can be re-aged on your credit report. It means, say, if you owe $8,000 and you settle it for $2,000, granted the balance would be zero, but instead of it falling off in 2 more years because it's already 5 years old in itself, that zero balance collection account is going to re-age for additional 5 years, and it's going to lower your credit score.
Oh.
So be careful. There's a thing called a pay for delete. So, Mr. Creditor or collection agency, I'm doing you a favor. My lender says that it has to be zero. So you say my balance is $8,000. I'll give you 2, but I want a deletion letter before I make that reduced payment. Pay for delete, because even if you pay it today, it would take about 30 to 45 days to update your credit report anyway. But get what they call a pre-settlement letter. Never pay the $2,000 first and hope that they're going to send you a deletion letter. They're not going to do it. Good luck with that. Make sure that you get an email or something on their letterhead that says, upon receiving this $2,000 from Joe by this Friday, for example, we will remove this from his 3 credit bureau agency reports. Another thing, when you pay the debt, don't give them access to your checking or savings account. Bad idea. If they agree to $2,000, even if it's in writing, I guarantee they're going to take out a lot more than that. They're going to try to milk the cow for as much as they can. Do not give them access. Send them a cashier's check, a money order, and certified mail it overnight. Never, ever give them, or a prepaid credit card's okay, but never give them access to your accounts. Bad idea. So after you make the settlement payment, reduced amount, then you can take that letter signed by them on their letterhead, proof of payment, send it to the credit bureaus. They'll remove it usually within a week or 2. So.
Well, the first thing I want to say, man, is that you're giving some really good knowledge in regards to credit. Because like I said, me being in the collections industry, I know that everything you're saying is like spot on. Because as a collection agency owner at one time, if you didn't get that letter from us before you paid, 9 times out of 10, once we got the payment, you may not never get the letter from us. It may take us forever. But the point is, you do use that as a leverage prior to paying. That, hey,
correct,
before I pay, I want to. So, could you explain a little bit more in regards to credit? What creates a score, right? I have it here in front of me. Let the people know, out of a 750 or 850, what percentage of what gives them their score?
Well, it's going to be an open variety of credit cards. Meaning I would rather see someone have 2 credit cards at $1,000 limit each versus 1 credit card at $2,000 limit. It's a diversity. You have a well-balanced diet, well-balanced meal, you have a well-balanced credit report. So it's a combination of like an installment loan. It could be a student loan or a car loan or a personal loan from the credit union, for example. 2, 3 open major credit cards. And I do say major. Don't do minor revolving like Macy's, Nordstrom's Rack, things like that. Stick with major revolving, Visa, MasterCard, Amex, Discover. There's a big difference. But the most important thing is have a well-balanced report. Now, having a mortgage is also very healthy. The more mortgage debt you actually have on your credit report, it actually increases your credit score. unless you get lates or behind past due. That's different. So if you want to get to 800, you have to have at least $100,000 worth of mortgage debt on your credit report. First mortgage, not second.
I didn't know that.
Yeah, second's sometimes because it's like HELOC's considered a line of credit. So the more mortgage debt, everything's on time and nothing past due, is actually healthy for your credit scores. So if you want to achieve an 800 or a 750, you have to have an assortment of open and, of course, longevity accounts. As you see on that form, 15% of your credit score is length of credit history. So folks, if you have a credit card that's 20 years old and you hate that bank, and your next credit card is only 10 years old, if you close that 20-year-old account, you're going to lose 10 years of credit history. Don't do it. Now, if they close it, that's okay. That's a soft hit against your credit score. But if you close it, there goes your score. In that example, if you have a credit card 20 years old and the next one is 10 years old, if you close that 20-year-old account and lose 10 years of history, you'd be looking at about 100 to 150 point loss on your credit score.
Wow.
It will rebound eventually, but it's a hard hit before it goes back up. Oh. So be careful. Don't close old accounts. That's why you see major credit card companies closing accounts. This is closed by grantor request on the credit report because of inactivity. So to make sure that they keep the account alive and open on your credit report, especially with credit cards, use them at least once or twice a year. Keep it alive. If you carry a balance, that's activity. If there's an annual fee, that's activity. I'm talking about no annual fee, no balance, has been at zero collecting dust for more than 2 or 3 years. Eventually, that credit card company will close the account. So, but don't you close it. It's more detrimental to your FICO score.
What is the biggest misconception that people have about credit?
Credit card debt. Yeah, people don't know that when you go to an underwriter and the underwriter says, wait, they take a look at the dollar debt known as debt to income ratio. The credit bureaus do not care about the dollar debt or the interest rates on your credit cards. They take a look at the total percentage of availability that you have on each card at the end of each month. So you see which it's 30% of your score or 250 points. So for example, if you have, let's say, 2 credit cards with 10,000 limit each, one's maxed out, the other one's paid off. In that example, you have a 50% availability. But remember a moment ago I said length of credit history is 15%. So let's say for the sake of argument that one 10,000 limit, that credit card is paid off, open, but 20 years old. The one 10 years old is maxed out with a $10,000 limit, but $10,000 in debt. So if you close that account, you're going to lose 15% of length of credit history. And since the credit bureaus look at the total percentage of availability, you're going to go from 50% availability down to 0 because you just closed that account. So the ceiling caved in on the floor. That can, like 2 slaps against your face, and that will kill your credit score. So people think that what level of credit card debt should I have or not have? 0 is ideal, but only like 5 or 6% of the whole country pays off their credit cards monthly. Yours surely does. And of course, before COVID, that was 11%. People are living on credit cards. But the most important thing is don't close old accounts. Don't close credit card accounts, period. I don't care if you already have a Macy's account from 20 years ago. Don't close it. But credit card debt is the number one score killer. And I'm only talking about credit card debt. I'm not talking about past due or lates or collection, just maxed out. Fair Isaac says this, myfico.com says this. If you have let's say $5,000 or more worth of credit limits in debt, if you have maxed out credit card debt and you make the minimum payment on that maxed out credit card debt for 6 or more months, you lose an average of 100 points over 6 months. It gradually goes down. And that, again, that's not counting past due or lates. That's just on time or not
paying
even over
the minimum on time.
Right. So again, $5,000 debt or more, $10,000, $20,000, $30,000, whatever you have. If you make the minimum payment for 6 or more months, you'll lose about 100 points. Oh. Imagine if that person just dropped 100 points from 750 to 650, but the lender says, I need you at 680 in order to get you a decent rate. Well, imagine paying off all those credit cards, not closing them, and doing a rapid rescore with the lender and jumping up 100 points. That'll make or break some real estate deals. Mm-hmm. Fair Isaac also says this is just a national blanket number. MyFICO says this, if you increase a national credit score by only 10 points, you can reduce a national mortgage payment by $100 a month.
Wow.
More in California, more in New York, more in Hawaii, more in Miami. But on average, someone like in the Midwest where houses are cheap, You could buy a 5,000 square foot home for what, $900,000.
Yeah.
Here in California, it'd be 16 million.
Yeah.
But on average, if you increase the credit score by only 10 points, you can reduce a national mortgage payment by $100 a month. It's a great trade-off.
Wow. Man, I'm learning a lot here from you today, man. A lot of people have, like, credit right now, credit cleaning, credit restoration has become like very popular online for like the last, I say 5-10 years max, but about 5 years, especially during the COVID, after the COVID, everyone's credit restoration. I mean, I see them popping up everywhere. I mean, you won't believe it, right? I'm seeing like 20-year-olds teaching credit, right? Now, here's the red flag for me. And not to say you can't learn anything from a younger person. I learn things from younger people all the time. But here's the red flag. You must be 18 to get credit, correct?
Mm-hmm. Correct.
At 20 years old, you're only 2 years in. How much can you tell me? For someone like you, you've been doing this how long now?
33 years.
Prior to the internet,
Yeah.
prior to hitting dispute online,
Yeah.
right? Can you give me a little bit about, just go into your experience, versus someone who's just been doing it for 5 years or whatever?
Well, if you're going to look at a company to hire, references are, of course, the best idea. I mean, we work with Keller Williams, we work with Exit Realty, I work with Century 21 offices, mortgage companies, Hispanic mortgage companies, Vietnamese, Chinese, Korean, American, you name it, all across the board. And it's insane. We don't even advertise because we're so busy. But the most important thing is, taking a look at the knowledge of the person that you're about to hire. Understand what they know to teach you. I'll tell clients how to do it themselves for free. But Mr. Client, if you have a score in the low to mid 500 range, be prepared to spend about 14 to 16 hours a month on your credit if you do it yourself. Understand FCRA. Be careful what you say to the credit bureaus because it can backfire and re-age an account. Like I said a moment ago, don't pay collection accounts. Things like that. I mean, if you have a $500 negative balance at 6 years old, it's going to fall off in one more year. You pay them $1. They can re-age it for additional 6 years in that example. Be careful what they say. There's certain collection accounts I won't even touch when it comes to disputing, because the fact that it's too sensitive right now at the wrong time. Maybe 2 months from now, maybe 6 months from now, might be a good time to dispute that one collection account. But there are certain things that we won't touch. If someone tells you that credit bureau is 100% guarantee, walk away like it's a bad case of the plague. It's not there's not guarantees in this business. We have people, customers, clients that have enrolled in our services, and 2, 3, 4, 5 months later, they have new collections, new lates, new derogatory, and it's not they blame us, but it's not our fault. The internet, Yelp, these review websites called the court of public opinion. A lot of them are fake reviews if they look good, and the ones that are like 1 star, maybe a disgruntled client that he got himself into trouble by having more lates, more collections in the future. So you have to give a chance for yourself to re-heal. One of the most common things we'll turn down is a client who has rolling lates. Let's say you have a car loan and a credit card with rolling lates on it, or a mortgage. Late, month after month until October, and we know in November, December, January on, they're going to have more lates by habit. We're going to say, Mr. Client, we can't help you right now on these specific accounts. Maybe everything else we can clean up. But on these specific accounts, we're not going to touch. We're not going to clean up lates because you're going to have more lates based on habit. Call up your creditors, move the due dates, have 3 months or more of on-time payments on these accounts, and then give me a call. Because lates, collection accounts, removal of bankruptcies, it's tough. But there's a high rate of success. And in my world, it runs between 75 to 85% successful over time. Credit repair takes time. It could take an average of 3-4 months on the low side to 12 months on the high side. It's not a quick fix. I don't care if you had letters from every creditor that says, we're going to delete this from Joe's report. Minimum 60 days on something like that, which is not likely to happen. So it takes time. The credit bureau has up to 30 days to take a look at that dispute, and everything we do is online. So we take a look at the person's report. I'll recommend Credit Karma's good. If you have a lender report from a mortgage company, I'll take it. Or best website that I like is annualcreditreport.com. go to annualcreditreport.com, which means once per year. Save it as a PDF to your computer, email it to me, and I'll get my contact information before we finish today. But email it to me as an attachment, and we'll give you a free analysis. And I'll tell people how to do it for free. If they want to know how to do it for free, here you go. I'm an open book about that. I'm not going to hide things. But the most important thing is, guys, that there's no guarantees in this business, and it's not 100%. Never.
Now, if you had to put it in a number about how many clients you've dealt with over the years, what would you
100,000 plus? Yeah, easily. Yeah. And in teaching people, like in a webinar or a live event, in-person events, it's got to be more than half a million or more. I mean, I do a lot of public speaking events even today. COVID kept me glued to my office chair behind a computer, but now it's back, to reality. And next week, I'll be in Vegas, teaching a 650 person real estate firm out there. So it's fun. I like it, but yeah, it's a lot of people. I lost count. Yeah, I lost count.
Nice.
Yeah.
Nice, man. That's a hell of an accomplishment, man. I mean, that's a lot of people that you've crossed. And, I'm looking forward to seeing you get across to 500,000 more and millions more, especially online. Credit, man, I remember for me when I was younger, I was like on and off with it. At one time I sold cars. And of course, selling cars, you're always pulling credit. So you're like aware of credit. And then you feel stupid if yours isn't right. You're looking, you're pulling them. Oh, they're not going to approve of this. And then, I would become aware of myself. And then eventually, of course, as I got older, I said, you know what, man, the whole monetary system is backed by credit. So you have to take that as serious as your life depended on it in the United States, the economic system. Just from your point of view, for the what do you call them, conspiracy theorists and all of these people, we're going to crash and this is coming to an end and the 2000 market, it's going to again. And now I think today I woke up, they're talking about a new depression, blah, blah, blah. Is the credit system sustainable? Will it be here 100 years from now? We'll still be looking at FICO scores and
well, I have to say yes, unless we're going to a cashless society, which is happening. With all these smash and grabs, people robbing stores and banks, and there are businesses, retail ice cream shops and yogurt shops, boba shops that are going cashless because just to protect themselves, let alone the employees. So it could happen. Technology's here, but technology's been known to fail. Equifax being hacked 6 years ago, MGM Grand Hotels being hacked, and they had several firewalls better than Fort Knox, but they got hacked and lost $100 million according to the news. So I see it moving in that direction, that credit will always still be there. If it's an eye scan or DNA scan or a thumbprint, things of that nature that will happen and get away from using a social security number, it'll be around. It'll be around. I mean, in 100 years, I'll be 156 years old, so I hope to see that. But it's cashless. We're getting to paying with crypto. We're paying just with credit cards. I mean, it's becoming a cashless society, and U.S. Mint eventually will probably minimize printing cash, I'm guessing. So, very good chance it can happen. The credit system will be around. It's not perfect, but it's been around since 1950s, 1960s. I mean, Sears was the first company to issue credit card in 1945. So, it'll be around. Credit cards will be around. If it'll be a credit card-less credit card transaction, yes, it's happening now. You scan your iPhone, go like this. So yes, it's going to be around, but it's going to change with all the technology.
In a different form. So,
yep.
One of the questions I always ask, I always see people ask online, and I've never really got a definitive answer. Is there a way to just clean off inquiries? Because I think they drop every 2 years or something like that. Is there a way to say, you know what, I'm going to clean them off, get them deleted, like, anything else?
Deleting inquiries really doesn't really help your credit score. But going on there, of course, you don't go out there and apply for 16 credit card applications at the same time. Those individual hard hits will do devastating to your score. But we don't touch inquiries because it's a waste of time because it doesn't improve. I mean, from a visual perspective, yeah, it looks better that the underwriter says, oh, George, you applied for 16 credit cards last week. But from a credit score perspective, it doesn't make any difference. The best thing to do is contact the creditor, write them a letter, send them an email. Hey, you're right, it stays on for 2 years. Soft hit promotional inquiries stay on for 1 year. Soft hits don't do anything to your score. But the hard hits, they stay on for 2 years. Call up the bank or credit union or car dealership or whatever it was and ask them to remove it, and they usually will. Yeah. But these days, lenders don't really look at inquiries unless you have, like, in a very short span of time, like a month or 2 months, like 32 inquiries from credit card companies. What are you trying to get in the debt? So they won't know, especially if it's last couple of weeks, because it could take up to a month before that new credit card to show up on someone's credit report. For example, if you got the credit card today. So be careful going into a mortgage or a refinance. Just don't machine gun credit card applications out there. It's going to be devastating. But inquiries, just simply call them up or send them an email or send them a letter. Say, would you remove it? They usually do.
Okay, so inquiries isn't something that...
Yeah.
Okay.
Yeah.
Could you tell people, like, where to contact you, a website or something like that, if someone wanted to get in contact with you?
Most definitely. My phone number, and I'll repeat it twice, is area code 949-371-8885. Again, it's 949-371-8885. And my website is debtandcreditguys with an S on the end.com. Debt and A&D creditguys with an S.com.
And, and just to, because like I said, man, there's tons of credit people online, man. I just want you to reiterate, your experience, your expertise. You're just not some regular credit guy to them. I'm going to just, they're going to do the same thing, which try to delete something. It didn't work. Hey, man, it didn't work, blah, blah, blah. You know exactly how to tell them, hey, this can or cannot work, and we're going to work it the right way.
Yeah, correct. And we're old-fashioned, the hands-on with the client. So call us. You can also text me at that number as well. And my team will physically evaluate the person's report and email them an action plan, usually within a couple hours after they send in the reports to us. We don't have the ability to pull an internal report because we're not a mortgage company. That's only specialty for that confidential information. So annualcreditreport.com, we give them a free consultation. If it's late in the afternoon, we'll get back to you the next business day with an action plan via email. I got a team of 15 people that examine people's credit reports and see the do's and don'ts of what we can do to help and things that we can't help them with. And we also tell people, this is what you can do for yourself to help yourself improve your FICO score. How can you make positive accounts even more positive? That's a subject for another meeting for it another time. But most importantly, we're looking for a trampoline effect to increase their score, and we're hands-on. So you always and the clients usually talk to me or one other person in my company. So I'm very particular how we do things. But I got a team of 15 people that do all the processing and so forth. Now, one thing I also want to mention is there's a new service. It's not really new. It's called debt elimination, and I'm teamed up with another company that can do that. I'm looking to bring this in-house pretty soon, but right now it's very complicated to get that type of set up. It's not debt consolidation. It's not debt settlement. It's debt elimination, and does not ruin the person's credit. So if you have max out credit cards, car loans, mortgages, there's a way to pay it off in a fraction of the time without making a dime more than your minimum monthly payment as it is. So I won't get into all the details of it, but if someone's interested in doing that, instead of paying off credit cards in 25, 35 years, they can get it paid off in 5 to 8 years. A 30-year mortgage in 8 to 10 years. So call me offline, folks, if you're interested. I'll tell you more about that. But very powerful tool to not only get yourself debt-free quicker, but it's called an interest killer to save thousands of dollars on paying interest on these interest rates.
Nice. And I personally want to say for all you single mothers out there, okay, that, you don't have a man in the household and you don't have a lot of money coming in, you're going to need some good credit. I'm just being forward here. If anyone is interested in cleaning up their credit, becoming a better person on paper at least is what it's really about, okay? Cleaning your credit, becoming more manageable with your money and your time, I'd advise call up Rob. He's been doing this before Google. He's been doing this before YouTube. Me personally, I'd rather run with the people who were around before the tech because you've evolved with the business. Anything you want to leave them with here?
Well, I've been around before electricity, so I guess that might be a compliment depending on how you look at it. But most important things, guys, let me give you a free evaluation on your credit score. I don't care if you have one little small ding or you have a whole bunch of dings. Let me look at it. It doesn't hurt for eyes. It doesn't cost anything to look at your report. And if you have nothing negative, send it to us. We'll give you how to make better credit better. But most people out there, I'd say at least 86% of this country have okay to very bad credit. And so I'm sure that 80% of this audience that are listening to this, that will listen to this recording, they're going to need help. So if you're looking just for some free advice, send me a report. You're welcome to text me on my number. You can email a report just for some free consultation.
There you have it, ladies and gentlemen. Robert Childs, the credit expert. Once again, your website is
debtandcreditguys.com, and my phone number is 949 area code 371-8885.
Get in contact today to fix your credit. We're out of here.